Welcome back to Zacks' second annual Best Ideas Review, where we share our top picks for 2026. I'm Senior Analyst John Vandermosten, and I'll be sharing with you some of our analysts' ideas for the coming year. Themes behind our recommendations recognize the value of gold, natural resources, and assets that maintain their value even during periods of high inflation. Others reflect the increasing demand for energy, as well as the rise of AI, cryptocurrency, and electric vehicles. We also have a few life sciences picks that address unmet needs in an increasingly aging global population. Join us as we review each of these companies with links to our research in the description box below. Okay, investors, let's get started. Our first pick is TRX Gold. It is a junior gold producer operating in the East African country of Tanzania, participating in a joint venture with the State Mining Development Company. TRX is expected to benefit from increased production resulting from its project expansion. 2026 gold production growth is expected to increase from 30 to 50%, leveraging the benefit of historically high gold prices. Furthermore, TRX's access to higher grade ore and improved cost efficiency from plant upgrades are expected to drive a 100% revenue increase this year and another 115% rise in 2027. TRX is considered to be a de-risked producer now that it is producing gold bullion for sale, and management believe that the company's ongoing growth plans can be fully funded from internal cash flows for the life of the mine. Our analyst, Ronald Wortel, assigns a $1.80 per share valuation for TRX Gold, providing an 80% return from the recent close. Next, we have SBC Medical, which provides business solutions to medical aesthetics companies to help them optimize and expand their operations. It's focused on the U.S. and Southeast Asia. A recent collaboration with Orange Twist, a U.S.-based medical spa, provides a new avenue of potential growth, building on SBC's Asian operations. Boasting cash of almost $130 million, the company appears well situated to pursue additional opportunities. The company employs its proprietary approach to improve revenue per visit for its clients by using pricing strategy optimization, targeting a growing customer base, using a multi-band strategy, and focusing on international markets. Our analyst, Marin, uses a comparison price-to-sales approach to generate SBC's valuation using other relevant companies in the industry. This generates a target of $6.50 per share, representing upside of 43% from the recent close. CBAK Energy Technologies, ticker symbol CBAT, is a lithium and sodium battery manufacturer and seller in China and other regions around the globe. In 2025, the company completed a portfolio upgrade, replacing its previous generation of cells with more efficient ones, providing improved volumetric efficiency. CBAK expects to increase production volume to 100,000 cells per year by the start of 2026. Production growth is expected to continue in 2026, which, according to our analyst, will lead to 70% revenue growth to $343 million. With markets in electric vehicles, electric tools, and uninterruptible power supply systems driving industry growth, CBAK's push into volumetric efficiency differentiates the company's offering. Combined with improvements in the productivity of existing facilities and plans for a new manufacturing facility in Malaysia, CBAK is in a strong position to drive growth and expand market share. Our analyst, Brian Lantier, has a $1.50 price target on the company, representing upside of over 70%. Tonix Pharmaceuticals drug Tonmya was approved last August for fibromyalgia, and the commercial launch has begun. Pricing has been established, and the sales team is actively introducing the product to formularies and negotiating with payers. It should start ramping sales by the second half of 2026. Our analyst anticipates peak sales of $600 million by the end of the decade. Fibromyalgia affects about 4 million adults in the U.S., with limited and only partially effective treatments available from several generic products. The space has lacked any new proven treatments in the last 15 years, and Tonmya helps address one of the unmet needs of existing therapies by addressing sleep quality and reducing pain. Its side effect profile is also better than the previous standard of care. Tonix also has its depression drug, TNX-102SL, in development, which is expected to begin a phase 2 trial in the middle of this year. Our analyst, David Bautz, has a $64 price target for Tonix, representing almost 3 times upside. Deep Yellow Limited, ticker symbol DYLLF, is an advanced stage uranium exploration and development company seeking to deliver over 10 million pounds of uranium annually when active projects achieve target production. Its 2 leading projects are located in Namibia and Australia, with another high-grade development project in the Northern Territory of Australia. The company is delaying further development of its 2-mass project in Namibia, anticipating improved contracting prices that reflect the supply-demand deficit that exists over the next 5 years. The thesis for Deep Yellow relies on the increasing demand for uranium from growth in nuclear power deployment globally. In the power generation space, there are 440 nuclear reactors globally and 66 under construction, and another 400 planned or proposed. Prices are at a 17-year high, with a rising futures curve from $83 per pound now to $102 per pound by 2030. There is also limited new supply coming online, which places Deep Yellow in a strong negotiating position as demand increases. The company also offers a management team with substantial experience developing new resources. As with many natural resource plays, there are substantial risks, including a change in sentiment on nuclear energy and if an accident occurs, risk of conflict in development regions, and commodity price changes. Our analyst, Stephen Ralston, calculates a valuation for Deep Yellow of $2.14 per share, representing upside of about 50%. HITI, ticker symbol HITI, is a cannabis retailer featuring Canna Cabana stores in Canada and Remexian pharma locations in Germany. HITI differentiates itself from other cannabis purveyors with a membership structure offering free and paid tiers. The company uses a Costco-type business model that locks in loyal customers, provides rich customer data, and high profit margins from membership fees. The company recently made a majority investment in Remexian, a German medical cannabis pharmaceutical company, which offers store growth and improving margins, with help from HITI's procurement expertise. Trends that support growth for the company include more consumers buying legal cannabis, an improving regulatory landscape, the rescheduling of cannabis in the United States, further store growth in Canada, and a strong balance sheet. Our analyst, Michael Kim, sees 2026 revenues up 47%, flipping this year's earnings positive for the first time. He recently raised HITI's price target to $7 per share on a higher earnings outlook following the report of third quarter results. This represents 175% upside from the recent closing price. Our next offering is Blue Gold Limited, ticker symbol BGL, which is a vertically integrated gold fintech company. Its platform will include gold mining and trading, a gold-backed stablecoin, and a consumer-facing platform where users can spend, redeem, transfer, and manage assets backed by gold. The company has set out to create and distribute the world's first gold-backed digital currency called the Standard Gold Coin. Customers can buy, hold, and spend their gold, including the convenience of using a gold-backed debit card. While not included in our analyst target price, Blue Gold has rights to a disputed mining lease for a gold mine in Ghana, Africa, with approximately 5.1 million ounces in measured and indicated resources and another 900,000 ounces of inferred resources. Our analyst, Tom Kerr, believes the company is poised for strong growth over the next 10 years, and the stock appears to be significantly undervalued, offering material upside for investors. Tom's target price of $20 per share does not include the value of the company's Ghanaian gold mine. The $20 valuation represents 7 times upside based on the recent trading price. If the dispute in Ghana is resolved, the mine could add another $20 to $30 of additional value per share. Our last idea is my pick, Radiopharm Theranostics, ticker symbol RADX. The radiopharmaceutical company is developing a broad portfolio of radiopharmaceutical assets to address cancer. Its experienced management team and respected academic partners combine novel targeting antibodies and radioisotopes to address unmet needs in oncology. Radiopharm's lead asset is an imaging agent designated RAD101, which is able to detect brain metastases in patients that have been previously treated with stereotactic radiosurgery. Standard imaging approaches are unable to distinguish between scar and tumor tissue, leaving radio-oncologists with insufficient information to make a decision on further treatment. We think that RAD101 could be approved in the United States by 2029 and serve a market of 1.3 million patients globally. The company is also developing 3 lutetium-177 therapeutics targeting PD-L1, HER2, and B7H3, which are all novel approaches for radioconjugates. We expect to see a phase 3 start for RAD101 and clinical readouts for the PD-L1 and HER2 assets in 2026. Our valuation is $13.50 a share, representing upside of 160%.